Oh, that's right. The steps to follow before entering a trade. So yeah, anyone who's interested in that, certainly feel free to watch live or watch the recording afterwards. That's our Wednesday webinar, 12:30 GMT. It's the steps to follow before entering a trade. Always helps to just have a bit of routine in trading, just to kind of keep you consistent, avoid missing opportunities, things like that. Anyway, without further ado, let's start today's webinar. So I'm assuming at this point you've all had a chance to read the risk warning. Let's get the platform up on the screen. So Euro potentially interesting here. So overall, characterize this as a rising trend, but definitely some weakness coming into the market at the moment. So a couple of Fibonacci's I want to point out to you. Firstly, this is what I was looking at on Sunday evening. Obviously, we progressed a little bit from there, and you can see that we're actually rolling over slightly from the plan. So 123.60 was where I had this kind of midpoint, which is roughly around the 50% of that bearish engulfing daily candlestick as a potential place for the market to roll over again and continue this bearishness. Now, one thing, but what you can see is that actually the market's already started to fall down. Now, I'm not going to chase it, but you can see that rather than the 50% pullback and the kind of these highs over here, I think the market's paying more attention to maybe this swing low here and the fact that we kind of barely nudged beyond that previous little swing high there. So actually it's been the 38% Fibo that seems to have capped any pullback into, this is the daily engulfing candlestick, and this is the extent of the pullback we've got. We're now at lows of the day. So from here it's looking pretty soft for the euro. Obviously not particularly ideal selling into a support level as we currently find ourselves, but this is building up to be a fairly bearish looking day, engulfing several days worth of candles here. Several hours worth of candles. And looking to continue that bearish pattern on the daily chart. And what I'd point out to you there is that that level came at, it was basically the midpoint between the kind of two last areas of support that you'd look for, which is between the 61.8 and the 76.4. And you can see we had that kind of spike high double top situation there, and then we rolled over big time on Friday. So it's looking a bit soft in the euro at the moment, and I think given that we made a new low down here, but then we had quite a vicious reaction, but weren't able to take out any new highs, the first port of call to me naturally would be the 2170, which is kind of this base area of support here. But I think we could drop down as far as the 121 handle, which is kind of the big longer term area of support that the market's been trying to edge its way down towards. So as part of this range bound condition, this very bearish looking setup here, we've fallen through the 50-day moving average again. I think we go a little bit lower this time, but we'll have to see what happens at 2170 first. If there's some bullish patterns there, well, it will be strong support. So we'll have to revise our expectations. But if we continue to nudge down here through without any bullish patterns, then at 2090, basically the 121 looks on at the moment. Obviously, that's all bearing, and that's all with it in mind that generally the trend is higher here, so that's why we don't want to be too aggressive on our downside target projections here. Obviously, we've got the 200-day moving average, which could get retested, but just bearing in mind it's an overall uptrend. Being a bit conservative, but just acknowledging that this looks fairly bearish at the moment. Switching gears to the pound. So a little less clear what's happening here. We also had a big bearish pattern on the Thursday, and then we had an inside day to finish on Friday. So an inside day pattern can break either way. There's no obvious trend here at the moment, but there is quite a big level of support coming at this 137.70. So that's two matching lows down there. If we do break below this inside pattern, it seems like a pretty good chance it can continue to the downside, because what have we done? We've been consolidating quite a wide range. We've come up, tested the 50-day moving average and rolled over from it with a big bearish candle. We retraced some of it because it was near this big support, but if we can give out basically the two lows that made up that inside candle pattern, to me that would be quite likely to see some follow through down to the 136 level, which is, you know, these two former areas of resistance, could be support on the downside. But again, the same idea as the euro, 200 days still sloping higher. We just could be in for a bit of a deeper correction here. But the trend, you know, the larger trend does seem up, but just we're looking a bit soft at the moment. And I did have a little picture to go with that. Let's just kind of see if I can illustrate that idea. So if we got, obviously alternatively, we've got some clustering of moving averages up here. If we did get a break of the moving average to the top side, then we could move pretty swiftly up to 140.60, which has been some resistance, maybe even that 140, which was that high over there. And then there's 136.50 as a more interim level. And then 136. So I guess 136.50 is if you're using the high here, and then maybe more like 136 if you're moving down into more like the high there. So that's the zone basically. Switching gears to dollar yen. So we've had a scroll, there we go, a clear downtrend in place, right? But for those of you who attended the NFP webinar on Friday, it was this was the NFP reaction which took us above the declining trend line here. We were talking at the time about this kind of little reversal pattern down here. It's not perfect because it's not kind of within a trend, but it's basically a pin bar reversal, Pinocchio bar. We did the left eye, the nose, and the right eye, and then a break through the top of that pattern. And now what we're doing at the moment is we're coming back and retesting the top of that pattern as it was resistance. We had a breakout. Now we're retesting it as support. So 106.50, we kind of want that to hold. If it does today, we're looking better set up for a continuation up to 107.90, which is the peak here, or indeed 108 being the round number. Again, same concept, obviously just mirrored of the euro and the pound, is that actually the overall trend is very much bearish for the dollar. It just looks like we're getting a bit of a rebound at the moment. I probably wouldn't even take this, but it's coinciding with a bit of a double bottom here at 105.50. So the fact that we couldn't really make lower lows, you had a bullish engulfing pattern there off the low. I think, well, maybe that was a Sunday candlestick, but nonetheless a pretty strong pattern off the low, followed by this reversal pattern and a break of the trend line. So you've got three factors pointing to upside here, and then one main downside is that we're counter trend. But if we just, you know, it wouldn't take too much for us to rally up from 105.50 to 107.90, and you're looking at 250 odd pips if that were to happen. Sorry, 150 odd pips if that were to happen. Switching gears to the UK 100, it's obviously a pretty overall bullish day in equities, as has been the case quite frequently recently. The UK 100 is underperforming. Let's bring in my my chart here. This is kind of the way we're looking at it. Similar looking little reversal pattern here, right, from where we had several long wicks off the low, and that kind of is based on our closing price over here, which we've tried to push down on, you could argue, 4 separate occasions and failed to do so, and eventually we just broke to the top side and we're following through at the moment. So even though today looks soft, today actually could be an opportunity to move into what looks like a generally fairly solid rebound. The only slight worry is that we're looking a bit overstretched in some of the other global markets, namely the US. So if they roll over, then you'd imagine the UK 100 is going to as well. We're kind of in no man's land. I mean, if you consider this the range, 780, 7300, we were basically in the middle of it. So any pullback into this bullish candle here could, you know, if you want to kind of jump in a bit later, and assume a rise up to 7,300, then that's fairly low risk, but you do have these long wicks down here. So if you're going to put your stop under there, again, the reward is almost equal to the risk. So it's not particularly great scenario. My original idea from drawing here was that we were just going to utilize that high as a pullback area. So we're not far off that at the moment. We're a few points above it. So again, potentially an opportunity moving off that 7,200 level to the top of the range, or maybe even up to this cluster of moving averages up here, which is around 7,440. And just to repeat myself, it's based on the moving averages, we're sort of in a bit of a soft patch in a downtrend really. So market's looking positive at the moment, but got to be a bit cautious if we are buying in terms of our targets. So you'll notice that all these indices look fairly similar, some stronger than others. This is the Germany 30. We're still up here in Germany, but we're off the highs. We obviously had this very big steep downturn, but we found support at the old lows. We've rallied hard off it. I don't think it makes particular sense to use Fibonacci's in this area, in this particular scenario, because it's basically a range. But you can see that actually some of these levels are getting reacted to. I think probably the most reliable trades will be looking for places for this market to roll over again come 12 at 615 or some of these other areas, and I've kind of visually put it in this drawing here. I mean, we could probably rally up from here. It's not particularly good risk to reward, but then when we get up to these highs again, then maybe we can roll over from here, or if we do break, it's we could certainly go right up again, but as I said, at the moment it's some pretty fierce support turned resistance in this kind of zone between 12,750 and 12,800. So this could be a good area that people get a bit excited, see the breakout, and then there's a big cluster of resistance up there. The market rolls over deep again down to one of these levels. So that may be the higher. If there are any kind of decent patterns in this area, maybe we can take them. But for the moment, it looks like the better risk to reward is to wait for this market to pop a little further. So, I mean, you can see here that this is the Wall Street chart. Looks a little bit stronger than the European markets. Finding some resistance at the 50-day moving average and this little previous peak here around the 25,400 mark. That was where we had this level, we had the break, and then and then dropped straight through it again. So this 25,400 quite significant, I think, and that's why we're stuttering a bit around here. Another one to watch maybe will just be a trend line through the two peaks. Again, another reason for this area to cause a bit of resistance. See how we do today. I mean, if we ended up trying to push higher at the start of the day. And then we actually closed today lower based on this declining trend line, this little resistance, and the 50-day moving average. Cluster of 3 different resistance areas near, you could say, the top of the range actually would favor the market rolling over. I put this chart on when we were still a little bit lower in terms of the rally, but we actually rallied pretty well on Friday. So this looking slightly less opportunistic now as a trading scenario. I think we've already probably pushed too high into this trade for this to actually come off. But again, if we do get up to that high, 25,800, we can look for downside opportunities, and again up at 26,600, maybe that could be that's the old high, the old record highs. It's probably going to be a bit of a struggle to get through there and look for opportunities out there, but we're still a fair ways from that yet. I'll briefly show you the US Tech 100 just because it's such a hilarious divergence from the rest. You know, looking at an Amazon chart, and you can see it's just skyrocketing. Only really had one down day when we had the big correction. It's just been rallying ever since. So still some strong stocks performing out there. This rally, I believe, is hit. So obviously it's difficult to find resistance at record highs, but you can see it's actually hit the 138.2% fib extension. So that potentially a bit of an area of resistance here. If we do rally on from here, then you would expect the 161.8 to be new resistance of around 7,220. But again, yeah, look for some confirmation in these indices. If we get a few rolling over from today, probably the nicest looking could be Wall Street, given that we've been the most highest. Or if you want to go with the most weakest market, you know, maybe it's the FTSE 100. Switching gears to commodities. So here's the daily chart for gold. So what we could be looking at here is obviously we've had one sort of, well, if you count these levels over here, but 1, 2, and then 3 reversals from basically the 1310-ish sort of area. I put in this rising trend line, which seems to have some sort of merit, connecting those lows, that low a little bit, this low. But really it's the 1310 to say 1312 zone that's been supporting the market, with this little aberration down here as well. If we get a bearish candle as we're looking at today that takes out Friday's low, that was a bullish pattern. If that gets completely reversed the next day, that's pretty bearish, and we're probably looking to a bigger downside move, maybe down to this 200-day moving average, or maybe further down to 1265. It's big long-term resistance that we're facing at the moment, this 1350. I've mentioned it a bunch of times, the declining long-term trend line through here. It looks like we're failing at it at the moment. Let's see how today finishes, because if we get another long wick off this support, then maybe we've deterred sellers enough and we can actually rally up and retest these highs at 1340 to start, and then 1357 to 60, where we've got these highs here. But a close beyond that, this is where I've got the long-term trend line coming through, around 1340. So a close above there could look very nice, and that's why I've kind of highlighted here. You know, this is the rising trend line, a breakthrough there, probably pretty bearish for the market down to 1265. But if we get that pushed through, maybe hit those old highs, pull back to 1340, and then rally up from there, then we're looking a lot more positive, and gold will look like we can break out of the range. Switching gears to Brent. So we had a big bullish engulfing candlestick pattern on Friday, and so I've just put this fib level on here. Actually, I've got it from the low, but I tend to just do it from that particular candle. Oh, it's trying to attach itself. Let's try and change that. Snap to chart prices off. So this is the retracements we're looking at of this bullish engulfing candle. It's kind of in the middle of nowhere, but it's a little bit off these old supports. We haven't quite decided where we're going in this market in oil for the time being. Overall, long term, you know, this, you can see that it's still a generally rising market with the 200-day moving average pointing higher. But you can just see that this 50-day moving average is flattening out, and we're just obviously in a kind of a correction phase at the moment. We're just looking for some ideas to suggest that the correction has ended. A couple of reasons that it could have is that we did have this rising trend line through here, tried to break through it, rallied pretty strong to the top side, and just stopped short of this old resistance. But if you believe that trend line's held, maybe we're just pulling back for another rally higher. And then conversely, if you're looking at trend lines, We have one through here which has not been taken out yet, but we have a shorter term trend line going down through here, which is probably a little bit too steep to read too much from. Hence we're rolling over from it at the moment, but that has theoretically broken. So held this trend line, broke this trend line to the top side. Overall, it's a fairly bullish market, but we're below the 50-day moving average. So hence there's not too much enthusiasm. If you do believe in this bullish engulfing candlestick, which was a strong market reaction, then we're getting into about a 50% pullback at the 64.60 area. So that would be a value, and then obviously generally the way you play a bullish engulfing is buy at the open or buy on some pullback with stop somewhere under the pattern. So potentially some opportunity there. It's not ideal that we're still below the 50-day moving average, and we've kind of stuttered at that old resistance. This pattern today obviously looks pretty bearish as we stand. Maybe you can wait for this day to finish out, and if we close higher, then it'll obviously be a much better confirmation of the bullish bias, or if we close as we are, that would be an inside day pattern. You could just wait for the inside day to break to the top side. So kind of a choice of styles really here. Buy on this weakness, or obviously wait for more strength to buy the breakout. And last but not least, let's just touch on Bitcoin. Really bad week last week for cryptos in general, particularly Bitcoin, but looking pretty good at the moment. We've had a big reversal off the low, which happened between the 50 and 61.8% fib levels. And again, there's the 200-day moving average, and you can see there's basically been some buying ahead of that 200-day moving average. I don't think you can be too confident about the big long-term direction of this market until we take out 11,740. Where's my drawing on this one? Up here. It could be another sell opportunity for the sort of fourth time almost up there. But if we do take it out, then we're looking a bit better to retest those lows, or indeed through there, and then maybe the world's our oyster. We're back up into major rally territory. So this could be the beginnings of something down here. I know it's taken out the low, so it's not ideal, but it's certainly a value potential here. And if you look at some of the other charts as well, Ethereum as well, also coming off with quite big reversals off low levels, which is more of a sort of value buying opportunity than I would typically look at. But I think with that 200-day moving average, there could potentially be a bit of an opportunity after the big washout, actually maybe caught a few people off guard down here, and then actually rallies to the top side again. Let's see. Bit of a range-bound market in general, bit of a high volatile opportunity, and that high volatility, is why actually sometimes when you're buying at these low levels, it can prove worthwhile. So let's see how we go. If we have today as a if today closes as it is, it's a version of that the pin bar pattern I talked about with the eye, the nose, and then the right eye on this side. Those three together, a little bit like a morning star pattern as well. So that could be also, if you wait till the end of today to make sure we don't get a lower close or something, that could be confirmation on the daily close of more upside. Let's see. So I think that's pretty much covered all the things I was looking at covering today. Yeah, I think it's most of the popular markets. I don't see any questions, so I'm going to wind things down there. Thank you very much for attending, everyone. Much appreciate it. And yeah, check out that Wednesday webinar that's coming up. That's at 12:30 UK time. Cheers, guys.